Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
And welcome to the Investor Coaching Show. I'm Paul Winkler, talking money and investing along with Evan Partner. And we got plenty to talk about this week, of course, because of all of the market craziness, of course, as we kind of figured, last week we talked a little bit about how things were going to get a little nuts, and you just don't know where things are going to go simply because markets they move based on news, and news is constantly changing, and the news is going to keep coming out that is brand new. And I get a bit of a kick, during times like this, where I'll read newspapers and publications, periodicals, and what the headlines have to say. Always gets my attention. Market Watch. This week's record spike in oil prices triggers talk of an economic doomsday scenario. Yeah. Fed utterly paralyzed as Iran conflict stokes stagflation fears. Now, of course, stagflation, the idea that you have a stagnant economy with inflation. And oil tying, Trump offers $20 billion in reinsurance for oil tankers stuck in the Strait of Hormuz. May not be enough. I mean, this stuff is just, wow. Paramount says Warner Brothers deal could work out, big payoffs. Hollywood isn't buying. I'm just looking through the headlines. They're off on a tangent. This
is a real stream
of
consciousness thing here.
Yeah, it is. It basically is stream of consciousness when you read these publications. Defense tech stocks are now the hot trade as the Iran conflict widens. Oil futures haven't been this overbought since 1990. Doesn't mean the rally is over. Which one is it? Is they overbought, people paying too much, or is the rally over? That's the question that you have. So I like this because, this is the type of stuff that when it comes to investing, you can really get pulled off track in a heartbeat when you listen to these headlines. You can get scared and just say, I'm going to park everything in cash. I'm really, really worried about what's going to happen. It really gives insurance companies the impetus to be able to sell a whole lot more annuity products. And as I always say, hey, if this calamity that befalls the world is this bad, are the insurance companies even going to last? Because, they were talking about reinsurance right there. Well, insurance companies issue reinsurance. This was one of the headlines was about how this could be an incident. It could be a problem for insurance companies even. But anyway, going back, let me just make a point about this. These types of headlines, we forget. Go back through history and you think back through your own history. We have a tendency, and I've talked about this before, piece of research that shows that we tend to whitewash history as time goes on. An example that I use is this teacher that asks his students when they come back from summer vacation, what'd you do on your summer vacation? And the kids will say, well, this happened, and they'll have lots of positive stories and they'll have lots of negative stories. Then he asks them in December, before they go on Christmas break, okay, let's talk a little bit about what you did last summer. Little by little, the stories get a little bit less negative. Then he asks them, before they go on summer vacation the next year, what did you do last year? And they have all of these positive memories. There is something about, you talk about, when we were a kid. Evan, man, when we were a kid, things were just so great.
Right.
Boy, can't we just go back to the idyllic 50s, and the 60s? And it was just such a good time.
Right.
And we tend to forget a lot of the bad junk that has happened in decades past and how scared people were. I mean, we can go back in the archives and look at kids getting, hiding under their desks. I
did that.
Right? Me too. Going out the hallway. All that, line up the hallway. Stick your head between your knees. Yeah. Like, that's going to help.
A nuclear bomb will miss the hallway.
Yes.
I did that.
Great.
Except for tornadoes.
Yeah, well, it wasn't
Right.
for tornadoes. That wasn't the reason we were doing it. Because that might actually work. But it was, it's just, we think about how scared we were. I mean, how, the oil. I mean, Jimmy Carter getting up in front in the Oval Office and saying, we're running out of oil.
Yeah.
We don't know what we're going to do. And, how.
Well, and we're going to freeze to death.
Oh, yeah, sure.
Global freezing.
Yeah. But so that's why I love when you get a voice of somebody that's older that has been there, done that, on TV especially. Mm-hmm. And this is not typically where you hear this kind of wisdom on the financial channels. But Rick Santelli is one of these guys I love to listen to because he can get really, really worked up. But in the same token, sometimes he will drop some truth bombs and some wisdom on the listening audience. And he did that this week. Check this out right here.
And the market, well, yields are moving higher. And of course, Andrew, everybody seems to be looking at market turmoil. I don't know. Maybe I'm just a little bit on the older side here, but we had turmoil in 87. We had some mini turmoil in 89. Lots of turmoil in 99. Turmoil in 03. Turmoil in 07. Turmoil in 08, 09. But what I see now is a lot of volatility. AI gave us more turmoil than what's going on now. And just for the record, we're hovering at 413 right now in a 10-year. It's still down 4 basis points on the year.
So I just put it in perspective. We had this workshop that we did where we walked back all the way to the 1920s and 1930s, and we walked through all of those decades and the things that have happened. And it just boggles the mind.
Oh, yeah.
How much turmoil. I remember being in a class one time and there was the Ibbotson guys were there. Ibbotson, if you look at the stock market charts going all the way back 100 plus years, Stocks, Bonds, Bills, and Inflation was the book. And it was Ibbotson and Sinkfeld actually got together and they put together all this data on the stock market. And I was sitting in the audience and I raised my hand. The guy calls on me. He says, yeah, what's your question? I says, why did you guys go back to 1926? What a weird year.
Yeah.
I mean, the data that you actually have went back to 1926. Why? And he just said, well, the reason is because you had the Great Depression. We wanted to get data before the stock market did its big crash in 1929, 1930, 31, 32. We wanted to get data before World War II. And Hitler in Germany and all the things that happened then. We wanted to get data before the Korean War. We wanted to get data before the Vietnam War. We wanted, the oil crisis years. We wanted to just see how the market responded in all kinds of craziness. Mm-hmm. And that I thought was brilliant. I thought, what a good answer. And that's the beauty of it. When we look at, markets and we say, we know how they respond in all kinds of different types of atmospheres. And here's the thing. Why do we need to know that? We need to know that if all heck breaks loose, what happens? Do people typically lose? Because that's what people worry about with risk. If I ask somebody, what's risk? And I'll say, what risk of what? And they'll say, I'm going to lose all my money. And I said, well, let's actually look at that. Let's look at what happens in markets during world wars, where you have all of these countries all trying to kill each other.
Right.
Let's look at what happens when you have banking crisis, where you have the entire banking system is about to collapse or looks like it's about to collapse. Let's look at what happens when technology stocks go through an 80% crash in value. It's just all of that I think is really critical to know, because when we're investing for retirement, what are we trying to figure out? Trying to figure out, am I going to have enough? Am I going to be okay? Am I going to run out of money? And if I don't know how what I own is likely to respond in just about all kinds of, any kind of economic circumstance, will I ever... Question, ask yourself this. Will you ever truly be where you just don't worry about it anymore, where you relax about it, as we often like to say? Mm-hmm. Probably not. I can't imagine being relaxed if I have no clue how my portfolio is designed and I don't know how to measure risk. I can't imagine sitting here relaxed when I have no clue what the expected return on my investment portfolio is? I have no clue how you stay relaxed if you don't know where you are in the market with sufficient free frontier. And Evan's laughing because most people are sitting there going like, what?
What's your standard deviation?
Yeah, what's your
Expected
standard
rate of
deviation?
return.
Right. Yeah. But these are things I think that, if once you understand this stuff, it's not scary anymore. But
That's my biggest compliment when I'm chatting with clients, and it's not new. It's not new clients. It's clients that have been there 2, 3, 4, 10 years. Mm-hmm. Yeah, I just don't worry about it anymore.
yeah.
And they're still concerned about the future. They're not all, they don't have their head in the sand. But just to me, that's just the highest level of confidence. Is I just don't worry about it anymore.
Yeah. And I love it when you have like a guy says, my wife doesn't worry about it anymore either.
Yes.
That is my favorite compliment. Just to me is super, super important. Because so often what we do is we have so much time that we spend on, should I be in a Roth IRA? Should I be in a regular IRA? What should I be? Should I pay off my mortgage? Should I not pay off my mortgage? And all that stuff is important. Don't get me wrong. All of it's important. But so little time is spent really understanding, what am I doing? Why am I doing it? How does this work? Understanding a little bit about the investing process, not having to know everything, but just understanding those things, I think is super, super critical, because the media is going to scare the living daylights out of you. They're going to have this week's record spike in oil, price triggers talk of an economics doomsday. Well, economic doomsday, why? Because prices of oil are up, we're producing. What happens when the price of oil goes up a lot? We find other sources for it. Is it possible that this whole thing in Venezuela was done in anticipation? I don't know.
Right.
I'm not.
Well, we just got 4 tankers, right, full of oil from Venezuela.
Yeah. Is it possible that, you have people, I know people, Evan, I'm sure you know people that talk about sitting on capped wells in the United States.
Yeah.
And the only reason that they're capped is because the price of oil wasn't high enough for them to unleash the oil that they had inside there.
Yeah.
So that type of thing. Look at the technology. Oh my gosh, look at some of the technology coming out, energy saving technology that's coming anytime. I mean, literally, it's just out there. And will it hasten that technology coming to market? Yeah. And will it cause a situation where all of a sudden new sources of energy are now available to us because of this?
Yeah, it could accelerate adoption of nuclear power and reduction of regulatory stuff, and all of a sudden we've got a new renaissance.
Brilliant. Brilliant. No, that's a really good one. Yeah, it could be that happens as well. So I just look at this and go, the glass is half full because we make it that way. As humans, we're always trying to figure out how to make our lives better. We all do. And, all around the world. And it's like that article I was talking about earlier. Is Iran on the brink of another revolution? They very well could be. And if you unleash that amount of, that sheer number of young people that are hungry for a better way of life, they just are tired. Like this article, if you didn't catch what I was talking about earlier, this comment, I just thought, wow. This guy says he's a professor at Scotland's University of St. Andrews, is who I was quoting earlier. The vast majority of people, he's talking about Iran, the vast majority of people are struggling. Well, what would it be like if they weren't struggling anymore? The political system is hated. What if you have a political system that is no longer hated, but that people can stand behind? The economic system isn't delivering. What if you have an economic system that comes to fruition that is delivering? Salaries no longer meet the basic needs of life. I mean, what a miserable existence. You can't meet the basic needs of life, let alone do anything fun. Is it possible that all of this will lead to something that is way better than any of us could possibly imagine? He said there's an environmental crisis. Well, what if there wasn't? They've drained the water table. What if that gets fixed? There's the technology. That's nothing new. The technology to fix those types of issues. This is something that I think is really, really important. Just to understand that, as Evan talked about earlier, when you look for us, we don't have those that are sitting there wondering. No, we don't have clients calling and saying, "Can you get me out?" We just don't. We just don't.
I get a couple of prank calls from clients usually.
Oh, do you?
Anytime these things happen, like,
I don't even get pranks.
Hey, I need to do.
Yeah. Typically the ones I get is like, I want to invest more now.
Yeah.
Stop. Buying the dips,
Right.
You just you don't change the asset mix. Basically when you're changing an asset mix based on predictions about the future, what's going to happen in the future, that's market timing by definition. But people think of it as prudent, and we're just like, nope, that's not where we're going to go. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money. And rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement, real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. Hey, what's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right. We are back here on the Investor Coaching Show. Paul Winkler, Evan Barnard, talking money and investing. I had this thing that was, Evan, I ran back to the copier room, and I said, oh yeah, I forgot about that article. Fake meat industry is in trouble.
Oh, no.
Next
Meats was like the highest performer somewhere, like
2
million% return or something.
I will never forget, I had a good friend, not a client, you'll obviously tell he's not a client based on what happened. I still love him dearly. But he said, I think you ought to just forget all this stuff you're doing, Paul, and just, Beyond Meat, just buy Beyond Meat. That was it. And I haven't talked to him in quite a while. It says plant-based burger once had investors licking their lips. The 2019 Beyond Meat, a maker of beef-free patties, went public with a market value of almost $4 billion. And remember him asking me about this when they went public. That's exactly what happened. The following year, sales of the plant-based meat surged by 45%. And you think, wow, that's really great. That's huge. Countless startups joined the feast. Pun intended. Even some meat companies had a nibble at the business. Puns again intended, apparently. More recently, however, investors lost their appetite. Sales of plant-based meats are in decline. Beyond is now worth less than $400 million, and that was $1.4 billion, remember? Earlier was the number. So less than $1 billion gone. Bam. Ouch. Revenue shrank year on year after each of the three successive quarters in 2025, and probably again in the final 3 months. So, you look at this kind of thing, and this is what makes it so confounding. You look at these companies, and the reason I bring this up, big news this week, was a new fund coming out, an ETF, which is allowing people, it's a venture fund. Okay. I'm not going to even plug it. It's a venture fund. Venture capital. Wouldn't you really, and the way they're enticing people is what gets me. Wouldn't you have loved to invest in Microsoft before it was a public company? Man, what would it be like? Now, what is a venture capital fund? So, person starts a company. Joe Schmo starts a company, builds it up. And Joe Schmo gets up there in age and says, you know what? I don't want to work forever. Now, I want to cash out. This is something that can happen. I need to sell out. I'm getting up there in age. I don't want to do this forever. And decides to go public to raise a bunch of money, sell the shares of stock that because he's let's say he's the only owner of the company, and he wants to get his money back out so he can go off and ride it off in the sunset. And maybe they're going to make him run the company for a while longer, after buying out, and maybe a new CEO comes in or something like that. But here's the thing, that if you look at publicly traded companies and you look at companies when they're IPOs, when they initially become public companies, last thing I looked at, and I think it was the first 9 months that they're out there, they lose money. There was a statistic, something like that. It used to be like 6 months, and it was 9 months. I forgot what, the number has changed over time. But, the reality of it is you got a lot of people are looking at this going, man, I want to in on these things. And you can get enticed in a real hurry. And you can have a product that's popular, like this one I'm talking about right here. Sounds good. Beyond Meat. A lot of people, getting out of eating steak and they maybe for health reasons, maybe it's because, they think the cows are cute or whatever. But people have their own reasons for doing things. But recognize that you could have a company you jump into and things don't work out so well. And this is something that I remember selling. I said, no, I don't think I'd do that. I said this to my friend, but I don't think he listened.
Yeah. Well, I was, kind of kidding him, but Next Meats, which is, competitor, basically started at a penny a share roughly. And then back in like 2020.
Oh, yeah.
And in 2021, it shot to $10 and change.
Uh-huh.
And, we do a workshop and talking about stock picking.
Yeah.
And say, okay, how many of you have Apple? How many of you have Google? And everybody raised their hand. How many of you had Next Meats? Nobody raises their hand. Well, that had the highest return, for the last year. Mm-hmm. And Next Meats is now back to a penny.
Oh.
And it dropped almost to a penny within 2 years of when it went up to $10. But
yeah. Well, they said the problem that they were having here is that the plant-based stuff is still awful. This guy says he's just another person says that another person says a chewier problem for plant-based meat companies that their products are classified as ultra-processed. Well, you think about that. What are people trying to do when they eat this stuff? They're trying to get healthy. And they're getting healthy with ultra-processed, types of things. They had it said now health-conscious consumers are now wrongly equating plant-based burgers with potato crisps and Oreos.
It's the new fat-free cookie.
What's wrong with Oreos? That's my question.
I've never been a big Oreo fan.
You're not an Oreo fan?
I'm not.
Oh, what is wrong with you?
I can eat them. It's not that I hate them, but that's not my go-to snack for sure.
In ice cream.
I'll do ice cream.
You can't go wrong of Oreos.
Ice cream and donuts.
There you go.
Ice cream on a donut.
We are not here to keep you as a more disciplined eater.
No.
More disciplined investor, maybe. Everybody has
clients.
To have their downfall, and that's ice cream is fine. Everybody knows that. But anyway, so I just thought that was interesting. How many companies did you think were just going to be, pets.com or whatever?
Right.
I think they're going to be the great companies going forward. You find out that they're one company cooks their books and that goes south for that particular reason. Mm-hmm. And another company just comes out with a product that's really super popular. It's great and everything, but somebody comes out with a competing product that's cheaper. And that's the thing they talked about here. Yeah. It was pretty expensive. Even with meat costs soaring, it was still cheaper to buy regular meat than it was these products.
Yeah,
right
interesting.
Here.
So you were talking about tech stocks earlier, and the hype around them.
Uh-huh.
And what came to mind is I can't tell you the last time I heard about 3D printing. A couple 3 years ago on the show, it was like, okay, now 3D printing, and now Musk's getting into 3D. It was kind of a hot thing. I have a friend whose son
is into it,
and I haven't heard much about it. I'm sure it's going on and probably doing great, but it's not the hot thing, and so
Yeah, true.
It's just doing its deal.
And I don't, he tells me a little bit about it. My friend son does it, and
Yeah.
he tells me a little bit about what he's doing. I don't know that it's hot or if it's really. I mean, he sells some stuff, which I think is interesting. He's just a little guy's an entrepreneur. He's out there 3D printing stuff and
Cool.
selling it,
Yeah.
which I think is kind of neat. But yeah, those types of things, they get hyped up and then they kind of go by the wayside and something else catches somebody's fancy. But go figure. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.